Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're talking about STEM, and it's been a while since we've discussed them on this channel. We first covered them back in December 2020 and I've mentioned them a couple of times since, but in the slow moving world of energy storage and AI energy software there's not been a massive amount to talk about. However, there have been some exciting developments over the past couple of weeks which have not been addressed by anyone else that I've seen, and so if you're interested in STEM or what was Peak Energy Transition Corp, then this is definitely not one you want to miss. Now, I always ask this favour on this channel now. In our battle against clickbait on YouTube, please can you smash the like button? It's so helpful in letting the algorithm know that it doesn't only need to share and recommend clickbaity content. Ultimately, that's not good for investing YouTube in the long run. And so please can you help do your bit by smashing the like button. You're doing an amazing job at this so far. Please keep it up. It's massively appreciated. If you're new to the channel, then make sure you're subscribed. If you want to see more content, join the private Discord and the live video calls, then check out the Patreon page. And as always, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. So the key recent developments at STEM which we need to discuss are the Q1 financials and what this tells us for the year ahead, the recent new customer win, and also the upcoming investor conferences. These are all important for the stock price and the overall sentiment for the company, so we'll address each one in turn. Firstly, let's talk about the Q1 results. On their own, these are clearly great, with revenue growth of over 275% on the prior year and an improvement in the gross margin and EBITDA margin. Not only this, but the order backlog is also up by 20% and the business is clearly performing well and on a great trajectory. As part of this, management also reaffirmed the same targets for the full financial year FY21, which had been outlined during the original SPAC investor presentation. That being revenue of 147 million and EBITDA of negative 25 million. Now, as we did discuss previously on the channel, last year, for the company to deliver its full 2021 figure, they only had to secure a small number of new customer wins, which represented a very low conversion ratio on the existing pipeline. So far this year, the company has announced some material new customer wins, which positions the company very favourably to deliver the full year target, and most likely beat this if the company continues to win new customers. Now, you can be excused for looking at the 15.4 million of Q1 revenue and thinking that the company has a long way to go to deliver its full year target. However, it's important here to remember the seasonality within the business, with Q4 being the most important, typically bringing in around 50% of the revenue for the full fiscal year. Personally, I think that management are being quite conservative here, so I'm fairly optimistic that the full year revenue target can be exceeded. However, to do this, clearly a strong Q4 is required. An important metric to keep in mind here is the contracted backlog too, which currently sits at 150% of the 2021 revenue estimate. The other important dynamic here to remember is the high levels of recurring revenue the business generates and the long-term contracts it operates under. As the business scales, this will become a larger and more meaningful component, but with each strong quarter, it enhances the overall proposition and helps drive the business towards profitability. Now, the second thing to discuss, which flows on quite nicely, is the recent new customer win which the company announced at the start of June. It picked up a 15 megawatt battery storage project with Akerna, which, as well as representing a good bump to revenues, also further adds to the company's credibility. Now, there are important considerations here. Firstly, signing a contract does not immediately lead to revenues on that same day. The project itself will need to be at a specific stage of development before the hardware is acquired and then before it's fully operational and before the software and energy revenues are recognised as well. This dynamic and this lag is what creates the contracted backlog. However, this figure is a good sign for the company and is representative of future earnings which the business will generate. The key for management here is making sure that this contracted backlog can be converted into actual revenue during the respective fiscal year in order to hit the target. However, whatever way you look at it, winning contracts like this is good news for the company and its ability to deliver on its future ambitious growth strategy. It also represents a good further opportunity to win more work and more projects with Ameresco, and is a good sign for the future pipeline too. Now, the final point which we need to address in relation to STEM is its participation in a number of industry conferences over the coming weeks. Now, such events can be very powerful PR within the investor community and can be used to help raise the profile of businesses amongst institutional investors who may not previously have been aware of the company. I think this is also particularly important for STEM, given its recently completed SPAC merger, in enabling it to prove to the market that they are a company to be taken seriously, rather than one of many other SPAC targets which were basically pre-formed companies which were capitalising on fairly unprecedented market conditions to raise capital. Over the course of June, STEM will be participating in conferences hosted by Cowen, Goldman Sachs and JP Morgan. Not only is this good news for increasing awareness of the company, it could also result in the company attracting new analyst coverage and price targets, which again are always positive catalysts for the stock price. Personally, I think this is something which has been overlooked a little with STEM, but which could be great news for the stock price in the near term. So in response to those who ask whether I'm still invested in STEM, the answer is yes. Just because I've not spoken about STEM as much as I have some other stocks on the channel, it does not mean that I've changed my view in any way on the business, or that my investment thesis has changed at all. I'm still bullish on the stock, and I'm really excited by the rapidly growing addressable market which the company is a leader in serving. If anything changes about my thesis or about my views on the company, I will of course share this, but for now I remain as bullish and excited by the company as I was when I first saw it, and personally I think the future prospects for STEM remain unchanged. The one important thing here to remember though is that this is a long-term investment and you need to be patient. The company is delivering on its strategy, and other long-term thematic focused investors like myself have seen no evidence why this fundamental underlying thesis has changed. Be patient, let the company continue to deliver its great financials, win new customers, and maintain and strengthen its position as market leader. Anyway, thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel, then make sure you're subscribed and check out the Patreon group if you want to join the private Discord, the live video calls and other things. And as always, please let me know your thoughts and comments in the comment section below. I love hearing all the different thoughts and perspectives, so please get involved. But thank you so much for watching, and I'll see you in another video.